Hi everyone, welcome to this week weekly market update. As usual, we'll look at what happened on last week and then we'll look forwards to what is coming up for this coming week and things to watch out for as well, and also bring up some interesting topic, perhaps some of the one of the industry that right now is going through over the weekends, whether they will pass the infrastructure bills or not. But before that, remember to like my YouTube, remember to follow my Facebook page, and also remember to join my Telegram as well. If you have not do so, please do it, and like my YouTube and Facebook page will actually, encourage me to do it more for you guys on the weekly update as well. So last week we can see that down, we know before down actually raised 100 points, close at a record high, mainly due to last week economy data, the non-farm payroll, and as well as the unemployment rate. We can see that the both of the rates, both of the employment rates and the non-farm payroll is coming in strong on the July itself. All right, so the economy add additional 943,000 jobs in July, and also the unemployment rate fall below, I think, additional 0.3%. You see, unemployment rate fall to 5.4%, whereby the forecast actually say that it's around 5.7. So these both good news, right, actually push the market to another new high for Dow Jones and for S&P 500 as well. But then the thing is that last week I actually write in the Telegram, if you let's say these two news, right, is actually so-called the head start. What do you mean by head start? This is so-called the head start for the market to look into whether to start tapering or not. As you can see, all right, the strong job report could prepare the Fed to dial back its bond buying program. So it's like they will start to taper on the bond purchase. But before they start taper, right, definitely they will need to increase the interest rate first, right? Because once they increase the rate, then you will make the bond purchase slightly cheaper. Am I right to say? So this is how the financial work. So they will be looking in when to start increasing the interest rate first. As you can see, I think it's stated somewhere here. Someone actually said that they will have to go into the interest rate first. Okay, so tapering back that program will be the first step towards ultimately raising the interest rate. All right, so they right now they forecast that uh Fed forecast on 2023, and after that, once they raise the interest rate, they will gradually pull back the asset purchase, which is the tapering will then kick off lah, 10 months later. So this is what they predict and what they look forward. All right. So as a personal, trader, individual trader, what should you prepare by then? It's depend on what is your durations, your holding durations. If you are more on swing trading, position trading, then might not be that impactful to you because it's still 2023, right? But if let's say you want to hold very long terms, invest into bonds, treasury, all this, then just be aware of that as well. Okay, so this is what happened last week. That's why the market closed positively, and and of course we can see that if you let's say want to break down where does the job actually came in, I'm using CNBC website. You guys can just go there and Google and read up more lah. I just give you guys a summary as well. So basically for the jobs, July jobs actually came in is on the leisure and hospitality. Most likely is into this sector itself. I think it's because COVID try to return back. The vaccines, most of people get vaccinated, that's why uh they thought that the leisure sector, travel sector will once again reopen. But who knows, actually the Delta variant came in, right? So I'm not sure how accurate will this be. Um, but just bear in mind, right now, even though the market is good, the jobs report is good, but compared to before the COVID seasons, right, the pre-COVID, right, is actually still way below. All right, still way below the data itself. We can take a look around here. You can see that. So we say that the compositions of the jobs gain show some real progress of the economy, which is still down more than 5.7 million payroll, which is the pre-pandemic level. All right, so don't be too happy. But it's a slightly good news, at least it's slowly recovery, right? The economy. All right, so next thing have been talking about is actually the China hush on the education crackdown. So right now we can see I have shared with you guys the charting on the shares itself for TAL, EDU, this kind of counter is totally plunged due to the regulations, right? So is there any catching of the falling knife? We'll look back at the chart later, all right? But ultimately, because they did some survey, I'm not sure whether how accurate can it be. He also say that this person, right, this one of the Chinese parents, say that they will consider to form a small group with other parents to hire private tutor for their children. So ultimately, like China, even though the government bans the after school tutoring, but I believe the parents itself will still like their children to pick up on more tuitions, all right? Because China is very competitive market among each another, especially if you want your children to go into a better school, right? You need to have a better result. So I think they will do it so-called the black market instead, in the way of black market instead. So by then, right, government is even harder to find out what happened, because right now it's listed, they know the revenue of the company, everything. But if let's say they go private tutor all this, right, you will never know what's the rate like. All right, so this is one of the concerns. Next thing, for this guy, all right, the chief of Hong Kong exchange, he said that it's a wake-up call for China corporate giant, but he said that in long run it's good for them as well. Ultimately, the company itself, right, those Chinese tech company need to reform themselves and get better. All right, so it's considered the crackdown is a healthy self-regulatory move. So ultimately, if let's say those big giant like Meituan, Baba, 10 cents, even though their price is falling down, but ultimately they will reform themselves. And once again, because their company is so-called a legit company, I mean a good strong company with strong cash flow, so there shouldn't be uh impact or so-called direct impact for that long, correct or not? They will recover once, I mean definitely will come back once again, right? So it's a good move to what he feel. All right, this is a very healthy self-regulatory move lah. All right, so don't be too pessimistic, too, I mean, too worried about all this big company lah. All right, so if it might give you a chance to re-enter, just know when is the right price to re-enter, so you can look, monitor the charts, find the correct entry price to buy in as well. All right, to start nimble into it. All right, next thing, we are talking about this over the weekend. What happened is actually the infrastructure bill. So I believe is they want to, is one of the President Joe Biden top priority is actually to, biggest investment in the decades for American roads, bridge, airports and waterway. So if let's say you are more forward looking, right, you don't want to look back, or you think that the previously the forward looking is actually the travel sector, the hotel sector, the leisure sector, try to recover back. But right now with this, right, if let's say you want to one step ahead, you should know what is the economy, what is happening, before you catch it, before you actually people start going into it, right? You be the first to go in. So right now, I think coming up will be the play of the material, because let's say you want to go into infrastructure, building material is very important as well, right? So you can look based on this is the S&P chart, but let's, before we come to that, we just go to SLB. XLB is actually one of the material sector ETF. So we can see that previously on the 18th July, I said that if it will break below 100-day moving average, we are eyeing on 200 days. So it's somewhere here. Let's take a look. All right, so I never delay what I see, right? I mean, I just show you guys. So I thought that it will come back here, but unfortunately, it didn't. It touches very close on the 18th July, right? All right, this is what I see on the 18th July. This is 16th July. So on the 18th July, it actually came, 19th July, it actually came lower, somewhere near 200-day, which is $70+. But it didn't. All right, it came close and then it bounced back from here. Correct. So my video was done on the 16th July. I didn't know what happened. So, but on the day itself, it gapped down, and then after it bounced back. So right now we can see that on Friday closing, right, the market actually stayed above all the moving average, and right now it's showing some bullish sign, and it's being supported by the 50 days, 40 days moving average. All right, which is the 1 month moving average lah, 40 days. 14 trading days. So this is what happened. But right now we can see that the market is bouncing up, and with the news of this infrastructure bill approved, all right, and then with the technical analysis of the ETF funds, we will start looking into individual potential um, building materials company or related building company that we can see is there any opportunity lies over there or not. But before that, we go to the we'll go to the indices itself first. So for S&P 500, you can see that previously I mentioned on 25 July, I say that it's break all-time high, stay above 4,004. We have a chance for it to go even higher, which is 4,006. But the The first round is actually 4,005 followed by 4,006. So every 100 point, right? So last Friday, right, with the good news, I thought that the market will be more on the bearish sentiment because it's actually going to show that there is no longer free liquidity, free money in the market anymore. So it might actually pull back the market itself. But eventually it didn't and it closed green. I think that the pullback will come in on the Monday itself. So most likely on this coming Monday, right, we will. I mean, I still bias on upward, but we will never know when is a good price to enter. So I think that Monday might have some corrections, not really a correction, just a decent pullback, and then we can actually go up here. So this is what my take for this coming week and see how it goes. But ultimately, eyeing for 4,005 or 4,006 for S&P 500. Okay, next thing, just a couple of follow up that few chart, DXY, which is a dollar. All right, so dollar itself, like I say, you will be more. I'm more biased on the upside. I have shared my video. It's all downloaded in the uploaded in the YouTube. You can go and watch back if you don't believe what I say lah. All right, so go up and see. Then I say that immediate resistance is 9150. All right, 9150 is somewhere around here, all right, below. Once it break above, so right now it's trading on top. So the pivot key resistance is 93. Then we are looking at 94.5. So this is every individual target. I'm more biased on the upside. Of course, when you say that the interest rate will come and step in, right? So if let's say interest rate hike, dollar will be strengthened as well, right? That's why the market go up for dollar itself on last Friday. Okay, so this is what happened. And then but for gold it actually came down uh because dollar up, gold come down, right? This is a standard. So we can see commodity price in USD will come down. All right, so previously I shared it will come to 1670. I think it last couple of weeks, and then right now it break on last Friday. All right, so based on Fibonacci, it break below, based up resisted by the 38.2%, and then right now it came down. So where I'm eyeing, I'm still eyeing on 1670 for gold itself. All right, so this is my take for gold, and then next, just a few follow up. Pfizer, remember I mentioned Pfizer at the rooftop. All right, broke, first broke, second broke, the rooftop, third went higher. All right, this is all tricking the breakout strategy. All right, if you managed to catch that, if you TP at 43.20, which is a previous high, it's still a good decent run and good money, right? If you continue to hold, then congrats to you for the bonus jackpots. All right, next one I mentioned LVS, Las Vegas. So the Las Vegas, you can see I dropped so many weeks ago, right? When 18 July, target 48 or 38. So the lowest is where is 38 plus. 38 plus before it bounce back. So I'm still looking at whether we reach 38 or not. Of course, it hit the 40 lah. All right, it hit the 40. People who put TP at 40, congrats. Bonus still have to wait for a little bit more. All right, bonus still have to wait for a little bit more. All right, so this is what I see for LVS. Is going to hit the major support since 2012. All right, 2012, 2016, 2020, and then one more times. So will it hit or not? I mean, if you, it's too late for you to enter, but congrats for people who entered previously. Okay, next thing I mentioned Nokia previously when GameStop, AMC all boom, right? I said in the March, you can see or not? So risking risk play, sorry, it's a risk play for NOK. Look at 470 for the first TP. 470 eventually hit, it go even higher. Right now it's at $6. Can you see that? I charged somewhere here. I'm not going to show you. This is the weekly chart. Go to the day chart. All right, can you see? So it never came below my support line at 37.2. All right, $3.72. It never came down and go up all the way. So if you are in Nokia, congrats to you as well. So next thing, okay, for Nikkei. Nikkei 200, this index I have shared as well. I say that higher chance it might come down because it's forming some triangle here. I'm looking at 26,200 and then followed by at a 38.2% FIBO. All right, 26,200 is somewhere in this green color line. All right, so right now we can see that the US side, the market, the European side, the market is going higher and higher. But however, for the Asian market, it seems like it's not. So what happens if let's say the market for the US side is breaking all-time high, but this is not, when the US side is coming down, I think there is more pressure for it to come down soon. All right, so no change in my direction bias on Nikkei 200. I think it's more on the downside, and I'm looking at 26,200 as well for Nikkei. All right, so next, I will be going into individual counter. So don't want to drag you guys for too long. So for this week, right, like I say, building materials, right? So I will bring out this thing is called LOMA. All right, this is one of the material in Argentina. I mean, I don't know how it relates, but I just look at something that's similar. So we can see that the market since 2020, after the COVID, it plunged below. All right, so 19 it gapped down and then it plunged below. Right now, actually it recovered. All right, it seems like a double bottom. Okay, let me draw. It seems like a double or head and shoulder or double bottom, whichever you call. All right, it's like a double bottom. So the thing is that right now we are looking at a gap play. All right, there's a gap here. We are looking at a gap play. So for people who want to try, you can always nimble a bit and then see how it goes after that. Okay, so this is one of the counter LOMA for me. All right, right now it's riding with the trend itself. All right, nicely trending. You can put, if you want, you can put like uh, channel. All right, and then you draw somewhere here. All right, so right now it is at the upper channel. Is there any where is your risk reward? You need to adjust yourself. All right, so I only showed some counter for you guys to put in your watch list for buying price, stop price, those kind of entry price is more on for the private group. All right, so next thing I will share with you on this counter is called LAC. All right, LAC is also something that I would like to bring to your attention. It's also one of the building material. Right now, market have zoom up all the way. Current climb since 2020 March, climb up all the way to $28. All right, right now, once it go up, we always use Fibonacci retracement to see is there any support level coming in. So once I draw the bottom to the swing high to the swing low, I can see that it's been supported by the 38.2%. All right, support once, support twice, and why is so significant? Because 38.2% is used to be a resistance previously. Used to be a resistance previously. All right. Okay, so this right now I'm looking at based on the day chart. I'm more biased on the upside lah. But just to take note, earnings report is losing a lot. All right, reported last week. So, however, the price seems like sustainable. So I'm not sure how truthful is this. All right, so if you want, you can nimble a bit, then just remember to put your stop loss. Okay, so for the next counter I will be saying is actually this BCC. Okay, give me a second, it's not loading. Okay, for this BCC, so it's the same thing. All right, so we can see that the price go up, came down, Fibonacci retracement. Right now it's being supported by the 50-day moving average. I mean 50-day Fibonacci. But the thing is that right now it only touches once or simply twice. It's not very significant. All right, and it's being restricted by the moving average. So I think this might take a little bit more time to cook before you give another breakup. All right, this is my take for this BCC. All right, so that's all for this week. I come to close it. Okay, so just be careful. If you don't know how to trade, just put into your watch list and then you monitor from there. Otherwise, you want to be one step, can look at the building material. Okay, that's all. Thank you very much. Have a nice week, everyone. Bye bye.